If I told you today that Bitcoin could hit $1.5 million by 2030, you probably think that sounds unrealistic. But what if I told you this number is not coming from a random influencer? It's coming from people managing billions of dollars. People like Cathie Wood from Ark Invest, Tom Lee from Fundstrat, and even some of the biggest institutional players quietly positioning behind the scenes. And right now, something very unusual is happening in the market that most people are completely ignoring. Because while the news is full of fear, inflation, uncertainty, Bitcoin is not reacting. Because while the news is full of fear, war, inflation, uncertainty, Bitcoin is not reacting the way it used to. In fact, it started to do the opposite. Let me explain this in the simplest way possible. Let's start. In the past, whenever global market dropped, stocks down, gold under pressure, Bitcoin would usually fall harder. But recently, analysts like Tom Lee pointed out something different. Bitcoin is showing strength while everything else is struggling. And historically, this exact behavior has happened right before major bull runs. Not when everything feels safe, but when everything feels uncertain. Because markets don't wait for good news. They move before the news changes. Now, let's talk about the $1.5 million prediction, because this is where most people misunderstand what's actually going on. Cathie Wood and Ark Invest didn't just throw a random number. They built this thesis based on real data, real adoption trends, and capital flows. Their base case is around $1.2 million. Their bull case, $1.5 million Bitcoin by 2030. And even their bear case is still in the hundreds of thousands. So the question is, what are they seeing that most people are not? The first big factor is global money problems. In many countries, especially emerging markets, people are dealing with inflation, currency collapse, and restriction on their own money. Now, earlier, Bitcoin was the main solution for this, but today stablecoins like USDT and USDC are handling transactions, which actually makes Bitcoin even stronger. Because now Bitcoin is no longer just used for payments. It is becoming a pure store of value, just like gold, but digital. And this brings us to a very important shift. Gold has performed well recently, but here's what most people miss. The younger generation is not buying gold, they are buying Bitcoin. And this is backed by real data. As trillions of dollars transfer from older generation to younger investors over the next 10 to 15 years, capital is expected to move into digital assets instead of physical ones. And Bitcoin is leading that shift. Now let's talk about something even bigger. Institutions. Right now, companies like BlackRock, Fidelity, and other major asset managers are already entering the space. BlackRock alone manages over $10 trillion in assets. Even a small percentage of that flowing into Bitcoin changes everything. And we are already seeing early signs through Bitcoin ETFs, which are bringing billions into the market. But here's the most important part most people don't understand. Institutional money doesn't come all at once. It comes in phases. First they ignore, then they test, then they allocate. We are still early in that process, and regulation is the next trigger. In the US, discussions around crypto laws like market structure, bill, and stablecoins regulations are moving forward. Once there is clarity, big money that is currently waiting on the sideline can finally enter. And when that happens, demand increases. But supply stays fixed. Only 21 million Bitcoin will ever exist. That's basic economics. More demand plus limited supply equal higher price. Now, let me show you the psychological mistake most people make. They wait. They wait for Bitcoin to feel safe. They wait until banks start recommending it. They wait until everyone agrees. But as Michael Saylor explained very clearly, by the time Bitcoin feels safe, it will no longer be cheap. He literally said, Buying Bitcoin at 70k or 80k today might look expensive, but in the future it will look like a massive discount, because when banks fully adopt it, when you can buy it easily through traditional systems, it won't be 80k anymore. It could be 1 million or more. And this is where everything connects. You have analysts like Tom Lee seeing early bull signals, investors like Cathie Wood projecting $1.5 million based on data, and institutions like BlackRock entering the market, and governments working on regulation, younger generation shifting to traditional assets. All of these are not opinions, they are real world signals. So the real question is not, will Bitcoin reach $1.5 million? The real question is, what happens if it does? And you ignored it, because opportunities like this don't feel obvious when they start. They feel uncertain, they feel risky, they feel early. And right now we are still early. If you understand this properly, your entire perspective changes. You stop reacting to fear, you stop chasing hype, and you start seeing Bitcoin for what it really is. Not just a coin, but a shift in how money works. And whether you agree with the 1.5 million target or not, one thing is clear: the people closest to the data are not bearish. My name is Lamia, thanks for watching, and don't forget to like and subscribe and follow us on X and join our Telegram community. See you in the next one.